Hey guys, it's Adam. I'm back here with another video. It's just going to be a market review. Basically, I'll do my market outlook about where I expect it to go possibly tomorrow and the next week, so you guys can have like a good understanding of what I'm looking at. And then also getting into the nitty gritty of what happened today within the overall price movement. We'll go over the 1 minute time frame of the different style that I've been doing normally on the YouTube channel, but we'll go over that as well. Let's give us a good perception of the overall market, how we can look at it on a day-by-day basis. So as you can tell, we're just still in this range, back and forth. And when we are in ranges of consolidation, ICT always says focus on NWOG to NWOG. So I cannot tell you if it's going to go up or go down, but I'm just looking intraday NWOG to NWOG, NWOG to NWOG. Overall, I am bullish. Okay, if we're looking at this daily time frame, we have this fair value gap that's right here, this BISI. We can possibly look for higher pricing if we can get a breakout up into there. But if we don't get a breakout, I'm okay with that. And if we just continue to gravitate down lower, down below this low, we could possibly look for lower prices down within here and then down within there. If you just go to the monthly time frame, you can still see we're in a very bullish monthly order block, which could send price up higher above this high into this high. But enough with that. We're going to go over today and what actually happened in the market. All right, so this morning we were up on the indices, so we're higher up in this range. So we are looking at the 50% of the range. So we were here this morning up within here in the NWOG. If you measure this range and even put the 50% on there, we're in the upper portion of this range. So in consolidation, I'm looking for shorts within something like that, which then played out, as you can tell, right here as well on NASDAQ. And now what are we looking for? We're looking for liquidity to be taken. We are looking for SMT divergence. We're looking at closures. We're looking at where price can draw to. All right. So noticing that we have bearish SMT. Notice how this high here at 4 o'clock, the 4 o'clock candle made the high, and the next candle here did not. But on NASDAQ, it made the higher high. So there's SMT divergence that is bearish, and it's also within this SIBI that's up here on NASDAQ. So that's another confirmation that we are going to trade down towards this NWOG down within here, and possibly towards the sell side liquidity, which we actually did not meet today, which is fine. Going down to the 15-minute time frame, you can notice that price comes up above this high here. The same here. So it took out these highs. So everybody that's short up here had their stop loss here, took them out, and price started to trade away. And when price starts to trade away, we can look for possible confirmations. There was a new day opening gap on here, but the indicator that I'm using, it changes over because the new day just changed over. So the new day opening gap actually just opened up for the new day. So it's not going to show it, but the new day opening gap was right within here, and it supported price to keep sending it down lower. So around this time, we had this making a higher high. So you see from here to here is a higher high, but from here to here is a lower high at right before our market open. So that was actually a catalyst for price to continue down lower. I did not personally take that trade because my rules only allow me to take a trade after 9:45 a.m. So 9:45 to 11:20 is my key time to taking trades. But noticing how price just trades down lower, down back into this range. And then down here is where I did end up taking a position today. So we're going to get down into that. But after price trades down lower, you might feel like, oh, FOMO, I missed out on this trade. But like, I'm not, because I know what I need to see, and I'm going to be patient and wait for the setup. But price trades down in, comes back up into this 5-minute fair value gap within this NWOG as well, and it still continues lower. It was not full confirmation that it did want to go higher or lower yet, so I was staying out of this trade. It was still a higher probability for a sell-off, as you can tell here on the 1 minute time frame. We came down, and then we started to move up higher again. And we came up higher here on NASDAQ, up above the opening price to take out the liquidity one more time. And then that also creates SMT divergence with the indices, because we made the lower high here, we made the higher high here, and then it started trading down lower. So if this was going to go bullish, we were going to respect this order block and also this volume imbalance, but then we ended up trading down and closing down below this range. So closing down below the volume imbalance here was basically indicating that price did want to continue down lower. And once we broke down lower into this range, we used this down close candle here on NASDAQ to basically send price lower into this new week opening gap, as we can see here in the blue box. It comes down, it starts to basically accumulate. And when I'm looking at that in this accumulation phase right here, I'm looking to see if there's any SMT divergence. If you want to pause the video and see if there's any SMT, you can, but there is SMT right here. So there's a right here, higher low, we made a lower low here. So it's SMT divergence, that's all we need. Now we're looking for our market structure shift. So now price trades up above, within here, above this swing high within here. So I want to see an energetic move, which is this one. And at the same time, if you're looking at that, we're seeing a nice energetic move here on ES over here on the left. So this is where ES was in par with my type of strategy, where this one was a little bit better. I had my first entry within here, within this volume imbalance. At the same time, NASDAQ was hanging out within here and not necessarily moving anymore. Looking at YM, there was more SMT divergence at these lows, and also with these lows here, there was SMT divergence with YM. Not too much here on NASDAQ and ES, but there was my main entry within here after we broke. We wanted to see these act as breakaway gaps down within here and not see price return back down on in. So then price ended up trading higher up into this area. If we go to the 5-minute, we'll see more new week opening gaps within this range. Let's go over to it within here. We were targeting back up into the new week opening gaps towards this high and also towards this new week opening gap that's sitting up within there, and also the 1-minute gap that's sitting within here as well. So if we go over the 1-minute gap, we have this range right, let's get into it, right up within here. So this 1-minute gap and this volume imbalance here. There was more bullish SMT within these areas. Notice how bullish order flow the entire way. So if you're looking at bullish order flow, this is what we have. We have the break up in, consolidate. It's using this inversion here as a form of support, breaks up higher, retest the high of this candle, and then starts to trade away. Come down, uses this fair value gap, has these relative equal highs within here. So it's going to leave all these highs. Notice all these highs it made equal. Starts to trade up, trades up into the volume imbalance, pulls right back down, gives us a retracement. We start to break higher, and once we get a candle closure within this fair value gap, because this could act as a form of like a SIBI for a sell-off back down on in. So if you want to write this down in your notes, like watching price action, if we can get a candle closure and still show willingness of moving higher, this would be another confirmation for more bullish price action to come in to reach up higher into our ranges here and up into our opening range, opening price, which was up here from 930 open. So price did end up reaching up into there after it came back down to the retrace, but at this time I was away from the charts. But then there's more bullish SMT here with NASDAQ, which then traded away in price. And then we'd really want to see this break up on in and retest. I believe I posted on Twitter one of my models where it uses the breakers within here as a form of entry after a consolidation, and it breaks up on in. So it breaks out of this range, closes bullish, and uses the fair value gap for institutional order flow entry drill to then send price back up in higher part of the range towards the NWOG. And also if we go to the higher time frame, we can see higher gaps that we could reach up on into. So if we're noticing here on the 5-minute time frame, we traded down on in with ES here. So if we pull up NASDAQ, you can notice how NASDAQ at the same time this candle formed, we did not trade down into a fair value gap. So at this same time right here, if you look at the right now, this low never breached this low. Where this low breached this low, and once we traded away, we are in our 1250 to 110 macro. We are now looking for higher time frame targets, which would be this NWOG here as a potential draw, the high of the NWOG, and also buy side liquidity, which was sitting up above these relative equal highs that are sitting right here. All right, and also NASDAQ working up higher into this order block that's up within here to accumulate those orders, and also within the higher time frame weekly gap that ICT has been mentioning as well. I'm not going to get too much into that. Just look at the weekly gap on your chart if you need to see it. But noticing how price trades down on in and starts to trade away. What do we see here in price action after it starts to trade away? Within our macro time frame, so 1250 to 110. We see this volume imbalance is sitting right here. Okay, and on NASDAQ, we're starting to staircase our way higher with those bullish closures as well. And we have a fair value gap. We tap down into a fair value gap here at this time, right here, at 1258, and at 1258, we're just hovering on this volume imbalance as we're creating more SMT divergence. So this is making the lower low on the 1 minute. This one's making equal lows within a volume imbalance where there was no price traded. So no price opened up or closed within that area. It's just an empty space that is being occupied to then reach our higher term target up within there. So this happened last week, I believe. I don't know if I did it on one of my last videos, but very similar situation within here, just like this. Another one, stop loss below 50% of the wick, targeting up to here. We're just basically our 5 handles that ICT always talks about. 5 handles, boom, done. Okay, trades up in NWOG, continues up higher in this range, trades back down on in, And looking at price action, we came up on in, traded down below, back into the NWOG. So we can use this NWOG as a form of resistance again. Trades back down through this 1 minute candle closure. This 1 wick comes right back on in. Look how deep that 1 minute candle closure was here on NASDAQ as well. So this was our shift in market structure after our fair value gap tap up in here. And I believe there was SMT divergence with YM. I can pull that up real quick. Not as much, but this was used more of like a breaker, this area. So this is more of like a breaker entry with here on YM. So as you can tell, this breaker block, you draw that out into this range. Boom, hits it just like that. And you're just going to be, not financial advice, none of this is financial advice, but just looking at price action throughout the entire day to get a hang on of what we're doing. I personally didn't trade any of this price action coming down. I was focusing on my other business, but at the time, we traded back down on in, and I started looking at price action within here. And we are in our 150 to 210 macro. And we start to see price trade on up in here. And I believe there was SMT on Dow. Let me pull that up again. Yes, there's SMT on Dow. Notice how we came down on in. I mean, we created these relative equal lows, but there was SMT when the other ones made the low. Notice how we made the lower low here in this area. And then we started to trade up on hitting higher. So we made the lower low where this one made equal lows. So these lows here, equal. These lows here, taken. So first step of the trading plan, liquidity taken. And then we're looking for those higher time frame PD arrays hit as the liquidity is taken. Now we're looking for a draw on liquidity and looking for institutional order flow to get us there. So what gives us the institutional order flow? It's basically the SMT divergence, the market structure shifts, the order blocks, the fair value gaps, the volume imbalances, and price action. Okay. So if you want to pause the video and look over here on ES of where a potential draw on liquidity can be, go for it. By all means, go for it. But now we have that low taken. We are in our macro time frame within the 20 minutes. Now we just have to find what we need to look for. SMT, a bullish move, a retest down on in after a bullish closure within this 1 minute inversion gap here. So people might think this is a fair value gap that it's going to sell off and continue down towards these equal lows. But we already took the lows in the other indices. We have SMT here, bullish closure within it, and we have a draw on liquidity right above these relative equal highs that are sitting right within here. Okay, so bullish movement on up in, taking out those equal highs to then trade right back down on in and basically consolidate the rest of the day. I was seeing if price wanted to come down into the lower part of this range now throughout the day. Looking on up in here, we took this high, we shifted down lower within here, and then we're in the 250 to 310 macro. Price then trades down on in after hitting this area. Let's see if there's SMT. I'm not sure if there's SMT. Yeah, there's SMT here. Oh no, there wasn't. So traded down on in. But I didn't take anything in this price action here. This was just not really too much of a fan. I'm just reading price action, showing like what I see right now. So we had the liquidity taken, this order block hit. Trades down and into the range, took this internal liquidity, trades back up on in, and then continues up into here. Trades down, comes back into the NWOG right here, trades back down. Nothing really here. Nothing really too interesting in any of this price action. This is where a successful trader starts to realize there's nothing really here for me, and I'm going to sit on my hands based on that. I don't need to take a trade in every single session, every single macro. I don't need to take a trade only if it's clear and present that we're going to reach towards that area. But we had basically, it's like it sold off in the morning, bought back up on in, came back down on in. So kind of just back and forth today, creating basically an even day. Closed pretty close to the opening price from today as expected on like a typical Monday. But yeah, that's going to wrap it up for today. I know there's a lot more that goes into this. There's 8:30 openings that can act as support and resistance and draws on liquidity, and also the midnight open as well. I think I took that off when I was doing my other review, but that's usually on my screen as well, the midnight open. But yeah, if you guys have any questions, let me know. Take it easy. Love y'all. Peace out.